Looking at it now, Ford's big dreams for electric cars are facing a big problem. The company is struggling with poor sales, and their ambitious plan seems to be falling apart. People are starting to wonder if this might be the end of Ford's electric car dreams. All this has really got their CEO worked up. Let's look at the reasons why all this is happening. Number 8. EVs are not profitable. Just like most other car companies, Ford is struggling to make money from electric vehicles. Legacy car makers invested heavily in EVs to compete in the market, but it turned out to be much harder than expected. For Ford, things are getting worse, not better. Instead of moving closer to making a profit, their losses are growing. Last year, reports showed Ford was losing $36,000 on each F-150 Lightning truck, and the total loss for their EV division, called Model E, was about $5 billion. Now, after Tesla started a new price war that forced Ford to cut prices further, Ford is reportedly losing $100,000 on each EV they sell. In the first quarter of this year, Ford sold just over 20,000 EVs, but lost more than $2 billion in those 3 months. However, their overall losses are somewhat balanced because their gasoline-powered cars sell much better than their EVs. For example, Ford made a big $3 billion profit from Super Duty trucks alone, and their hybrid vehicles brought in over $900 million in the first quarter. Before we continue, if you're enjoying this video, do well to give us a thumbs up and hit that subscribe button to show your support. If you've done that, let's continue. Number 7. Even Tesla, the EV giant, is losing from EVs. Tesla reported weaker than expected earnings for the second quarter, with automotive sales declining for the second straight period. The company's earnings per share were 52 cents, lower than the expected 62 cents, while revenue was $25.5 billion, slightly above the $24.77 billion forecast. Despite a 2% increase in total revenue from the previous year, automotive revenue fell by 7% to $19.9 billion. Tesla did see a boost from regulatory credits, which totaled $890 million, more than triple the amount from last year. However, the company's overall financial performance was impacted by discounts and incentives, leading to a drop in profitability. Tesla continues to lead in electric vehicle sales in the U.S., but its market share is shrinking due to increased competition and the effects of CEO Elon Musk's controversial statements. Tesla's adjusted earnings margin decreased to 14.4% from 18.7% a year ago. Despite these challenges, the company's energy business saw significant growth, with revenue nearly doubling. Number 6. Dealer resistance. The early adopter phase for electric vehicles has ended, and now there's no more talk about charging wealthy customers high prices with big markups. Nowadays, EVs are difficult to sell and are actually building up at car dealerships. Because of this, dealers are not very interested in selling electric cars. There are clear reasons for this. Selling an EV right now takes a lot more effort. Salespeople have to spend much more time because people who want to buy EVs think about their decision for a lot longer compared to buyers of regular gas-powered cars. In other words, salespeople are spending much more time to earn the same amount of money. From the dealer's point of view, having too many cars in stock isn't the only problem. Nowadays, the extra charges on EVs are very low, so it's not as easy to make money as it was when the Mach-E first came out. Also, dealers aren't happy about the fact that they might make less money from servicing EVs, since there are no oil changes or other regular services like with gas-powered cars. Given all this, it's not surprising that only half of the 3,004 dealers across the country are interested in selling electric vehicles. Number 5. High certification program. Ford had a bold idea to make every dealer who wanted to sell electric vehicles go through a special certification program. At first, the idea seemed reasonable. However, things changed when dealers learned how much it would cost. To become eligible to sell EVs, dealers had to invest at least $500,000. This lower-cost option included chargers, training, and other necessary items. There was also a more expensive option called Elite, which required an investment of $1.2 million. This program included additional chargers, demo units, and a listing on Ford's website. For many dealers, this didn't make much sense from the start. As a result, half of them immediately decided not to join the program. For the dealers who initially wanted to join, things became even more complicated later on. They began to back out because they didn't want to spend so much money on something so uncertain, especially since it wasn't clear if Ford's EV plan would succeed. On top of that, the program turned out to have legal issues. Many states and other authorities across the U.S. saw it as unfairly limiting the rights to sell cars. Because of this, Ford had no choice but to back down. It seems likely now that Ford will cancel the entire program and allow any dealer to sell electric cars if they choose to. Number 4, Ford EVs are not so good. Ford was the first company to introduce an all-electric pickup truck with the F-150 Lightning. Even though it had a few problems, it seemed like a good truck that could match the essential features of gas-powered pickups. However, when the new truck started driving on American roads, it became clear that EV technology still isn't quite ready for this type of vehicle. It soon showed that the F-150 Lightning had a lower towing capacity compared to gas-powered trucks and also lost a lot of its driving range. Motor Trend tested the F-150 Lightning with 3 trailers of different weights, from 3,500 to 7,000 pounds. They found that a truck with a full battery, which can normally go 280 miles, struggled with towing these trailers. The range dropped to between 90 and 115 miles, depending on the trailer. This showed that EV technology is still not well suited for pickup trucks. Number 3, reliability issues. When we talk about things like reliability issues, that's something we can understand to some extent. It's a new technology that still needs time for polishing up. Ford has never been known for being the most reliable brand, but things got much worse when they introduced plug-in vehicles. Ford's first electric crossover was the first to experience problems. It had some serious issues, including one where the battery could overheat. Because of these problems, Ford had to issue several recalls. One of these recalls was very large and affected nearly 35,000 Mach-E models made in 2021 and 2022. It was discovered that the battery contactor in the Mustang Mach-E could overheat, which might cause the vehicle to lose power, especially when accelerating quickly. This created a serious safety risk. The same issue also occurred after DC charging. When the F-150 Lightning was introduced, it also had problems. One major recall in 2023 was due to fasteners not being secured properly in the high-voltage battery pack. This issue could lead to electrical arcing and fire risks. Additionally, one F-150 Lightning caught fire and burned completely at the Dearborn plant, raising more concerns about Ford's quality control. Overall, Ford's EVs did not help improve its reputation for reliability. Even though EVs are supposed to be more reliable than gas-powered cars, real-world use has shown otherwise. Today, reliability issues are a big reason why potential EV buyers are cautious or stick with proven technologies, and Ford customers are no exception. Number 2, no money for investments. Like other car companies that started making electric vehicles, Ford thought it would lose a lot of money at first. They expected that with time and better production methods, they would eventually make a profit from EVs. However, it turned out that this process would take much longer than they thought. The point at which they would start making money is much further off, and the costs for their Model E division are much higher than expected. We have already discussed these losses. Yes, combustion cars can cover the losses, but no one knows how much time this is all going to take. So, in these times of EV uncertainty, Ford had no other option but to postpone the $12 billion worth of investments planned for this year. The production of the F-150 Lightning has been scaled down significantly, while the second battery plant in Kentucky has been postponed. These are just some of the many examples. And number 1, market trends. One of the biggest reasons Ford is having trouble selling electric cars is that the market has changed. We're no longer dealing with early adopters who are willing to pay high prices for the latest technology. Today, the focus is on the middle class, and it seems that this group isn't very interested in EVs. Many potential customers think they are too expensive. This isn't just about the price of buying the car, but also includes running costs, insurance, and other expenses. EVs are still too costly, and car makers haven't yet solved major problems like charging issues and range anxiety. Because of this, many customers are now choosing hybrid cars instead. Hybrids are seen as a proven technology that is greener than gas-only cars, but doesn't have the common EV problems. Alright guys, we've come to the end of this video, and if you enjoyed it, do well to click on the like and subscribe buttons. Don't forget to check our other videos on the playlist. We've got some amazing content for you. Thanks for watching, and we'll see you in the next video.